This is Max here, and today I would like to discuss with you one trading strategy that is highly profitable in Forex. Oftentimes, when we want to trade something that is that has a high probability of materializing, whether we are trading on 1 hour chart or on the daily chart. There is one concept that happens all the time in major currency pairs, and if you pay attention to this process, you end up having high probability trades on 1 hour chart, 4 hour chart, and anything higher than that, which is the daily chart. So the concept lies on one important fundamental, that is reading the daily chart. Now I have in front of me a Great British Pound US dollar chart, and I'll explain you what are some of the things that we want to look for when we want to trade such currency pairs. Now there is one, before we go ahead and start explaining you what this concept is, I would explain you there is a concept of trend reversal. Okay, so if I look at a chart and if I want to point out what is a trend reversal, one pattern that stands out all the time is it goes like this. So if you have market which is going up and it does a little bit of pullback and goes up, and then market comes down and closes below this level. Once this happens, for us this is a trend reversal. Now we don't have to see this pullback, this minor pullback on a daily chart as a bunch of candles going up and bunch of candles going down and then bunch of candles going up. Okay, we don't have to see this minor pullback as that. We will be looking at this minor pullback on the daily chart by reading micro trends. Now when I say micro trends, what I mean to say is that we try to identify this minor pullback on a daily chart by just looking at the small fluctuations, daily high, daily low, how the market behaved between one day to another day, and then trying to identify this little minor swing. Okay, so I'll give you an example of what I'm trying to say here. Let's say, for instance, let's take the example here. So I'm going to draw that for you. For example, market has been pushing up all the time here. Now you don't know whether it's going to continue going up. You can participate in the market by using the correct strategies of trend following, if you are able to identify this trend. But what do you do when there is a trend reversal happening? For us to identify a trend reversal, there are a couple of things we need to keep in mind, and then that is, for example, let's look at this day. This is day number 1. Market was kind of consolidating on this day. On the second day, what did market do? Market pushed up and it pushed down. Okay, so this was the pattern. Like if I'm going to draw this whole scenario on day 2, so it's going to be like this. So market went up and market went down, and then market went up on this day number 3, right? So market went up on This is day number 2. This whole segment is day number 2, and then the market went up on day number 3. I hope I'm able to clarify this concept very clearly. So when the market went up on day number 3, what happened after that? The day number 4 market, it kind of went back and it bounced back in. Okay, it did not close below this minor swing, and then on day number 5 you had a closure below this minor swing, which is on day number 5. This is day number 4 and this is day number 5. So I'm just going to draw one more time what this scenario looked like from day 1 to day from day 2 to day 3, sorry, day 2 to day 5. You have market pushing up, coming down, market pushing up, it came down and came back up. It did not close. So this was a swing, right? And what happened on day number 5? It came down, impulse, and closed somewhere here, which is like this point right here. Okay, so it closed. So when that happened, we know, okay, now the market has closed below this minor swing. This is the minor swing I'm talking about. Okay, when you're able to identify that the market is closed below this minor swing, that is your absolute indication that the next couple of days, maybe 1, 2, or 3 days, is going to be absolutely a short setup. Okay, so, and let's see how this all panned out on Great British Pound. So I'm just going to draw a couple of lines. So this was the minor swing we were playing. On this day, we became interested in shorting because we identified that, okay, the closure has happened. So what you can do is that when you identify a close that is happening below a minor swing, you want to pay attention to, you want to go down to the smaller time frame, either 4-hour or a 1-hour chart, and try to take advantage of the setup that is forming over there. Now there are a couple of ways you can short on the smaller time frames. That is a completely different strategy altogether, but it has given you a bias. So the market has given you a bias that for the next couple of days we are looking to short until the opposite happens, which is like what that means. You know, scenario like this happens. Like for example, if you look at this candle here, scenario like this is the micro swing that happened and then come down. So when this closure happens, which is happening somewhere around here, that is the point when we are interested in going long because the closure has happened. So as you can see, this went up. Now the next day it was a bombastic, it just went all the way up. So this is another trade you could have taken. Now this continues to happen, but we have to learn how to identify and how to trade. Now if I'm going to just kind of draw these levels here again and go down on the smaller time frame, I'm just going to highlight this in different color. And I'm just going to open myself here. Now I have a period separator which kind of explains what happened here, right here. So this was the day when we identified that the closure below this level has happened. So this day the close happened. So the close was like somewhere around here, and then we are able to see, yeah, the market has closed below this line. Okay, now we want to make a short here. Now the couple of ways you can make a short. that's altogether a very different strategy. One of the ways which I can clearly see here is something called double top short. Double top short is like when people have their stop losses on certain point and market goes in that stop loss position, and it takes all the orders and it wants to go in the opposite direction. So this is the double stop loss. So as we identified in the market, I'm going to change the color here a little bit, background color a little bit here. So there were a bunch of stop losses here. So market went up and took all the stop losses. So there's an order in the market, and what we want to do is as soon as we have that, we want to go short, and that's exactly what happened the next day. If you would have entered your entry here, somewhere around here, then when the market closed below this stop loss order, and put your stop loss somewhere around here, which is about 1 to 1.5 ATR above the high, as you can see, you had almost 4 times your risk reward. So that is what's called high impact or a high probability trading. It's like a sniping. We're just waiting and waiting and waiting for a confirmation of a bias. If you do not understand if you're not able to predict what is going to happen tomorrow, at that point, what you're doing is not trading. You're basically gambling. If you're able to predict what's going to happen tomorrow, even only just tomorrow, if you have to wait 5 days, 10 days, and you're able to predict by using this concept of micro swings, what is going to happen tomorrow, that's the time you want to take a trade. When you know there's a high probability this is going to happen, then you go to the 1 hour chart, 4 hour chart to make a trade. And I'm just going to show you another example on Great British Pound here using daily chart. By the way, we only use daily chart for this concept, nothing else. Okay. Another great example is somewhere around here. I'm going to delete this right here. Okay, let's see how we would have played it. Like when the market is going up, but how would we play it? Like any close below this swing would be a short for us, and it happened here. As you can see, it happened here. Okay, now the market came down significantly and closed it. Now this was a bit of a risky short because the market had already gone down on the next day and closed significantly low before, and then also the market has taken out kind of this low and even this inside bar low. Okay, very high probability that the market would reverse from here. So I would not risk it. But if you want to take chance by looking at the smaller 1 hour chart, yes, you can. This is what happened next day. So when the market went up, I'm just going to draw that for you, easy. So the market came down, okay, and then kind of what it did is that it went up a little bit and then came down and it pointed up, came down, pointed up, and then rejected, came up, came down, and bam. This candle right here, this guy was an extra confirmation that market wants to now target the next low. Market wants to go even more lower, because what happened here, I'm just going to get rid of this line here, get rid of this line here, and get rid of this line here. Market do this, and then what happened here? This was another level, and this was another swing. This was the candle that stopped, that closed below this micro swing. Which micro swing? I'm just going to draw that one more time for you. This micro swing. Okay, that's the swing. So it's like that. Market going up and then bam, closing below this level. Okay, so this micro swing happened. So we know when this micro swing happened, what are we anticipating? We're anticipating a short. So this is what happened. So we can go down to the 1 hour chart somewhere around this day and look for short setup. And what's going to be our target? It's because the market had already taken down this inside bar and went up and then again came down. Our next target is going to be probably this low, or if we are able to see more, it's probably going to be this low. And this is exactly what happened. Market came down, took this low, and then came down. So within all these couple of days, we needed only 1 or 2 trades, and we did it. We got it. Okay, so as you can see, by using this method, go a daily chart, we are able to identify what is going to be the bias next day. Once we are able to identify a bias, that's when we enter. We do not enter a trade if we do not know a bias. Okay, so it's as simple as that, guys. So I hope I have made myself clear, and if you have any questions, just feel free to leave a comment and I'll try to answer. And if you like this videos, if you want to understand more concepts on forex trading, gold trading, just follow my channel and I'll be happy to answer if you drop any comment. Okay, thank you so much. Take care.